In a historic shift in global markets, investors are pulling billions of dollars from China's economy, marking a turning point after 2 decades of considering China as the world's premier growth story. Wall Street giants, including Goldman Sachs Group Inc. and Morgan Stanley, are now championing India as the prime investment destination for the next decade. The momentum toward India has triggered a gold rush, with the $62 billion hedge fund Marshall Wace positioning India as its biggest net long bet after the United States in its flagship hedge fund. Zurich-based Vontobel Holding AG has also identified India as its top emerging market holding, and Janus Henderson Group plc is exploring fund house acquisitions in the country. Notably, even traditionally conservative Japanese retail investors are embracing India while reducing exposure to China. Investors are closely monitoring the diverging paths of Asia's two economic giants. India, the world's fastest growing major economy, has significantly expanded its infrastructure under Prime Minister Narendra Modi, aiming to attract global capital and divert supply lines away from Beijing. In contrast, China grapples with chronic economic challenges and an increasing divide with the Western-led order. While bullish sentiment about India is not a new phenomenon, investors are now more likely to view India as resembling China in its earlier days, a vast, dynamic economy opening up to global investment in innovative ways. Recognizing the potential challenges such as a predominantly poor population and expensive stock markets, investors are making the crossover, calculating that the risks of betting against India are outweighed by the potential rewards. Historically, India's economic growth and stock market value have been closely linked. The nation sustains a 7% growth rate. The market size can be expected to grow at a similar rate. Over the last 2 decades, both gross domestic product and market capitalization in India have risen from $500 billion to $3.5 trillion. Capital flows reflect this enthusiasm, with the main US exchange-traded fund buying Indian stocks experiencing record inflows in the final quarter of 2023, while the 4 largest China funds combined saw outflows of almost $800 million. According to EPFR data, active bond funds have put 50 cents into India for every dollar withdrawn from China since 2022. In a remarkable development, India briefly overtook Hong Kong in mid-January to become the world's 4th largest equity market. Some investors predict that India's ascension will continue, with Morgan Stanley forecasting that India's stock market will become the 3rd largest by 2030. Its weight in MSCI Inc.'s benchmark for developing market equities have reached an all-time high of 18%, while China's share has shrunk to its lowest on record at 24.8%. This momentous shift in global investment trends underscores the growing confidence in India's economic prospects and signals a significant realignment of capital away from China.
Subscribe to Oneindia channel and never miss an update.